But let's try and understand what's happening in global bond yields and whether, as domestic investors, Indian investors, we should worry about this volatility at all. Paul Mackel, the Managing Director and Head of Asian Currency Research at HSBC, joins us on the phone line from Hong Kong. Paul, good morning and thank you very much for joining us. How should an Indian equity investor understand this sudden surge in bond yields that we have been seeing for 10, 12 weeks now?
Well, I think it says a lot in terms of, what could actually happen when the Federal Reserve eventually decides to, tighten monetary policy. So when they adopted quantitative easing and same with other central banks, that led to a flattening in a lot of these, core government bond curves. But if the opposite is going to be happening, that is, stepping away from QE, such as the Fed is expected to do, that could lead to a steepening of these curves. But I think the knock-on implications for me is it makes me a little bit concerned about certain currencies like the Indian rupee or other currencies in Asia as well.
Okay. Can you just elaborate on that? I mean, what would your worries be about the Indian currency? Do you expect an outflow of funds? How bad can it get for the currency, and why would it be more bad for India?
Well, it's not necessarily that the Indian rupee is going to be more vulnerable than other currencies. That's not the case. I think that it's a very different story from what we witnessed back in 2013. But still, if this type of bond volatility were to pick up globally, as it has been more recently, typically that would probably fuel more of a safe haven bid for currencies across the board. So the U.S. dollar would be doing quite well. Say even the Japanese yen and peripheral currencies or smaller currencies like the Indian rupee would be under pressure to depreciate. So this is how I'm thinking about the story going forward.
Okay. Paul, hi, morning. Given that we have, a slightly slower growth story in India, perhaps a weakening currency is welcome for our own markets. But having said that, you had earlier mentioned that you have a target of 66 to the dollar by the end of this year. Do you hold on to that rupee target, and what could the near-term target be?
Well, yes, very much. I mean, we do think that that dollar rupee should be slowly trending higher up to 66. As I said, I mean, this is not a high vol currency story as it used to be. But in terms of the near term, at least, say over the next few weeks, we'd be looking at something like 65. It's a gradual move higher by dollar rupee that we're expecting.
Okay. Paul, yesterday, Christine Lagarde made a strong pitch to the US Fed to postpone the rate hike. Did that have a sentimental impact on yields yesterday? And will that, also be taken on board? What's your own timing of the Fed hike?
Well, our current timing is still committed to the September scenario, and I do think Lagarde's comments are very interesting because if you look at the data pulse that will be coming out of the U.S. over the last couple of quarters, it's been very soft, much softer than expected. But again, going back to one of the earlier comments about, could India use a weaker currency to help reflate? Yes, that's a similar story for many economies right now. A lot of the central banks are running out of policy ammunition, so they're looking for their currencies to do some of the heavier lifting.
Okay, yes, indeed. How would you approach the non-farm payroll numbers? Should we expect, what are you going with in terms of expectation? And should we be prepared for much more volatility on Monday?
Well, we're looking for a print of 230, so an increase of 230,000 jobs in the number today, which is pretty much in line with the consensus. It feels like, many people are a little bit fatigued that, a lot of the indicators that shape the expectations going into payrolls are pretty much suggesting around that type of median number. It makes sense for now. But, I do think that the trends will start to reestablish itself, going into next week. That is, in the currency market, we'll be looking at whether the core bond curves keep steepening. If they do, then that's going to be leading to a lot of volatility in the currency market. And again, I'd be expecting that dollar rupee would be under pressure to appreciate.
All right, Paul, we leave it at that. Thanks so much for joining us and taking us through your views. That's the word on the currency space.